Hi everybody, Jeff Yastine here. By the way, send me your comments, send me your questions. I would love to hear from you. You can reach me at this email address, jeff@yastine.com. And as always, follow me on Twitter and on Facebook, and make sure you subscribe to our YouTube channel if you haven't already. Now, I'll always remember a very valuable investing lesson. And ironically, it was taught to me long before I ever became an investor and speculator. It happened back in my days as a journalism student at the University of Florida, and this is back in the dark ages of the 1980s. A professor there had all of us read an article from that day's local newspaper, and he asked us what seemed like a simple question. How would you, as a reporter on the newspaper staff, advance this story? In other words, what other information could you possibly find out that will add a new perspective or expose a new angle to bring more understanding to your readers and sort of fill in the gaps on an evolving story? Now, the point of the exercise was to help us sort of connect the dots and envision where a story might go next. I've also found that to be a very valuable exercise when picking individual stocks to buy. So think about it. Why do some stocks languish, sometimes for years, and then suddenly become huge winners? Just like in my days as a student news reporter, as investors, we don't always know all the pieces of a company's story. We only see it in fragments, like a puzzle. And by the time we have a complete picture, the stock is already 100%, 200%, or 300% higher. So it helps to be able to connect the dots, to envision those dots and anticipate events that might spur a stock to move sharply higher. And I'm thinking about that a lot these days when I look at the shares of two companies, Hewlett-Packard, symbol HPQ, and 3D Systems, symbol DDD. I mentioned both of these on November 3rd to Wealth Press subscribers in a trading room seminar, and since then they're up around 13% and 12% respectively. On election night, I said that they'd be great Donald Trump stocks, and I'll get to the reason why in a moment. But with the election passed, I also think that they're good sort of President-elect Joe Biden stocks as well, again, for reasons I'll explain. In fact, as we get our COVID vaccines in coming months, I think that the post-pandemic economy is going to do for 3D printing companies what the initial pandemic did for Zoom and other stay-at-home stocks. As you might already know, 3D Systems manufactures 3D printers. As you may not know, Hewlett-Packard is also a major player in 3D printing as well. Now, years ago, 3D printers were these tiny machines that hobbyists and basically product designers bought, and they used to make sort of plastic prototypes. The technology wasn't really ready for prime time, and that was pretty much about it. Now, all that's changed in the last few years. Today's 3D printers can print items out of titanium, out of nickel, any kind of metal material, as well as durable plastics, carbon fiber, ceramic, and much more. More importantly, the machines are fast enough and durable enough to be incorporated into industrial production and assembly lines. For instance, Airbus uses 3D industrial printers to manufacture pieces of its commercial airliners. GE uses the same to make fuel nozzles and other components for its jet engines. VW uses 3D industrial printers to create the industrial tooling metal pieces for its assembly plants. And the list goes on and on. Porsche uses them to build original parts for older classic Porsches. ExxonMobil, Medtronic, and many other big companies are now incorporating industrial 3D printers into many parts of their operations. So what does that have to do with the pandemic, Donald Trump, or Joe Biden? Well, coming out of the pandemic, companies are going to be even more careful about how they invest their money and where they invest it, for their operations. And that's why I called it a good Donald Trump stock. It allows 3D printing, allows companies to move complex manufacturing out of places like China, closer to home. But it's also a good Joe Biden stock because the thing about industrial printing, 3D printing, is that it gives companies options to save money, options to figure out where manufacturing makes the most sense, given whatever the economic and tax policies prevail at that time. For instance, unlike a traditional production line with machinery that has to be kept staffed and running every day, 3D printing machines can be turned on and turned off. So you're only building just enough product, just enough widgets, so to speak, to meet demand. Let's say you're a parts distributor. You could 3D print your parts closer to your customers so you save on fuel and trucking costs. And as we emerge from the pandemic, I think companies will want as much flexibility in their operations as they can get. And 3D printers, industrial 3D printers, provide them that solution. Now, there are other 3D printing companies out there. And in my view, all of them are good buys based on the idea that a rising tide floats all boats. And that includes companies like Proto Labs, PRLB, which is up around 30% this year. It also includes Materialize, MTLS, which has more than doubled its stock value in this year already. Exxon, symbol XONE, is up more than 44% as well. But I like Hewlett-Packard in part because not many people know that it is a major player in the industrial 3D printer market. It has about 6% market share. So the stock is cheap. Hewlett-Packard, doesn't break out its 3D printer sales, but one consulting firm estimated that those sales had a triple-digit percentage jump in the quarter just before the pandemic hit and the economy slowed down. Best of all, HPQ, Hewlett-Packard, pays a reliable dividend, generates a lot of cash flow from its sales of desktop printers and other products. And with a price-earnings ratio of around 9, you're buying the stock cheaper than any other 3D printer manufacturer out there. In other words, if Hewlett-Packard stock was valued as highly as its 3D printing counterparts, the stock would be $60 or $80, not $20, just based on valuation alone. And my bet is that in the next handful of years, Hewlett-Packard might even decide to spin off some of its non-industrial 3D printing operations so that it can basically unlock a lot of the hidden value inside this particular category. I also like 3D Systems, symbol DDD. Once it was the leader in the industry, but the company's had a lot of turmoil since sales and earnings have tailed off in 2014. It's had a couple of CEOs that have come and gone, but the worst seems to be behind it, and they're doing a lot of the heavy lifting now with restructuring of its product line and doing some asset sales. And I think all that's already priced into the stock and kind of clears the decks. But next year, Wall Street analysts expect the company to earn a profit of around 23 cents a share compared to a loss this year, and they're rising to 32 cents a share profits for 2022. So if the rest of Wall Street becomes convinced that a real turnaround is at hand here, I think the stock could easily get repriced to $12 or $15 a share from current levels in the next year to 18 months. So overall, I think this is a trend that we're all going to hear a lot more about, not just now, but in coming years. It's going to be an entirely new 21st century way of manufacturing what we need, when we need it, and where we need it. And now is the time to buy before the global economy begins to truly accelerate again as we move out of the pandemic. If you like what I'm talking about, if you have any comments or questions, make sure to send them to me at jeff@yastine.com. Follow us on YouTube and follow me on Twitter and Facebook. I'm Jeff Yastine.